Man, some craziness in the stock market today. So there's been these huge sell-offs. So I'm right over here. Yahoo Finance stock sell-off intensifies as Dow plummets and tech sinks. Right here, stock market news today. Dow plummets 900 points. NASDAQ and S&P 500 sink as global sell-offs intensify. Now you can see over here, we've got NVIDIA. NVIDIA is down almost 7%. Amazon's down 5%. Tesla, I mean, they had dropped significantly. It's actually kind of working its way back up, but it's down 4%. The Magnificent Seven has shed almost 1 trillion value, led by Apple and Nvidia. So their Magnificent Seven, it's Apple, Nvidia, Alphabet, which is Google, Amazon, Meta Platforms, Facebook, Microsoft, and Tesla. And it's down in pre-market trading was down 12%. Obviously, some of those losses have kind of subsided a little bit, but that is a wipeout of nearly $1 trillion in combined market value, which is a significant amount of money. That is insane. So with all of these stock market plummets, what should you do? Should you sell off your shares? Should you try and capitalize off of this dip? Sell now when it's a little bit higher and then buy when it's a little bit lower and let it work your way up. I personally am not going to do that. This is what I'm going to do. Is I'm not going to sell, because whenever I've gotten emotional with my stock market decisions, that's when I end up losing. And right now it would feel like, it would be more fear-based than anything. And so it would just be emotional and I'd be selling something. Now, do I think the stock market could continue to drop? 100%. Yeah. I mean, we could see a huge dip, right? We've seen massive drops in the dot-com bubble and in the housing crisis in 2008. Huge sell-offs. And so could I capitalize it if I could perfectly time the market? 100%. Yes, I could. But I will admit I'm not perfect at timing the market, and I don't think anybody is. And so to get emotional and sell everything that I have now, I think is unwise. I kind of take the approach of dollar cost averaging, which is just consistently investing in the stock market over time. That's going to be the thing that gives you the most returns. All right, so there are some implications if you do end up selling. Now, if you sell within a retirement account, like if you had a 401k and you can adjust individual shares, you're not going to have any taxable income on that, because you can't pull the money completely out until you've reached retirement age. But if you just had a normal stock investing account and you were to sell it, then you are going to increase your taxable income for the year. You could be subject to either short-term gains if you've held the stock for less than a year, or you could be subject to capital gains tax if you've held it for longer than a year. So I'm going to bring up the capital gains tax rate for 2024. Now, if you have taxable income, lower taxable income, you could have a capital gains tax rate of 0%. Now, if you're single, you have to make less than $47,000 a year. Married filing jointly, it bumps up to $94,000. If you make less than $94,000 and you end up having capital gains tax, your capital gains could be 0%. Now, I'm going to break this down in an example. Say you had $80,000 worth of taxable income, and then you sold shares that you owned in Apple and you made $20,000 off of that, and that was capital gains. That would be if you bought it here, you sold it for here, and your gain is $20,000. That means the first $14,000, because you haven't reached $94,000, the first $14,000 of that gain would be taxed at 0%, while the remainder would be taxed at 15%, because your taxable income would jump above that $94,000 limit. So you could have capital gains when you go in and sell it. So I personally am not going to sell. If you look at the S&P 500, this is a historical chart. Now, obviously, you can see some huge drops, like in the 1930s when you had the Great Depression in 1929. It dropped from being 575 clear down to 102, which is insane. That is a massive drop. But you can see other drops in the market as well, like right here in 2000, is up in 2600, 2700, that kind of range. And then you had the dot-com bubble and it dropped. So we actually dropped down to 1,400 on the S&P 500. That's a pretty significant drop. But then just a few years later, from 2002 to 2007, it jumped back up to 2,300. And then the housing market kind of crashed and we had implications on the stock market as well. So it dropped from 2,200 down to 1,000. That's losing 50% of its value. But then it just started climbing again, right? And so you can see like the long-term growth is there. Obviously, you're going to have blips in the market, and some of them are bigger than others and take longer to recover from. But I mean, even right here, I think this is probably COVID. Yeah, October 21, and then it kind of tanked after that. So, but it's back up to 5,500. So, yeah, I mean, if I could sell right here and then buy right here and then sell right here and then buy right here and then sell and buy, that would be perfect. But in a perfect world, it just doesn't exist. So I would rather be buying consistently over time, and then I'm going to take advantage of dollar cost averaging and be able to have this long-term growth. So obviously, if you want to go and buy stocks or even take advantage of these dips, you're going to have cash on hand. You're going to have some capital. So make sure you are being wise with your money. Budget, reduce unnecessary expenses. If you can be frugal in any way, and then take that money and take advantage of these dips that happen within the stock market, that's when you're going to be successful, is if you can put as much money as possible into investing. Some easy things that you could do is obviously get rid of all credit card debt, pay that off as soon as possible, and then take any money that you were doing payments on your credit card and go buy stocks with them. Go invest in the stock market. I like to invest in mutual funds because it diversifies my risk. I have Charles Schwab has computers and algorithms and all sorts of crap that I personally do not have that can make my investment decisions for me. So I just buy a good S&P 500 mutual fund and just let it go to work for me. That's what I like to do. But you need a budget. You need to have the ability to go and buy stock. So I'm going to throw out this investment calculator. I always like to look at this. This just can show you how much small investments over time can make a huge impact. This is the investment calculator. I'm actually going to blow this up a little bit. I'm just saying you're going to start off with zero. You're going to invest for 30 years. Right now I'm 35 years old. So if I did this for 30 years, by the time I was 65, I'd have an ending balance of $1 million. I put a rate of return at 10%. That's kind of the average, 10 to 12% on the S&P 500, compounded annually. And then I'm just going to do $500 a month, and you can calculate this out. Now you can play around with it and be like, hey man, I actually think I could do $750 a month. At that point, you're going to make $1.5 million. Now your total contribution is only $270,000. But interest, you're getting over $1.2 million in interest. So making small, consistent investments into the stock market can yield huge returns. Now that average is averaging in all of those losses as well, right? So if we go back to the chart, the average return, obviously there's some years where the return would be negative, but over time it's consistently risen. So take advantage of dollar cost averaging. Now, for me, I'm also going to be hoarding money. I will say that I'm going to save cash for any drop in the real estate market because I like to invest in real estate. I have multiple rental homes. I have a hotel that I've partnered with as well. And so I'm going to take advantage of any dip that I may see in the real estate market, which we've had some news that home prices fell in July, which is a good sign for buyers, and hopefully we can see some more price drops. And also interest rates could be going down soon. The Fed has signaled that they may drop rates in 2024 and probably have significant rate drops in 2025. They've signaled up to 4 rate drops in 2025, which could help the real estate market. Now, obviously, to be able to do all of that, I need to be prepared. So anyways, that's the breakdown of some of the big things. That's kind of my strategy that I'm going to be doing with the stock market this year. I'm just going to be consistent in it, and I'll be saving up to find my next rental property. If you guys have any questions, hit me up in the comment section, and we'll talk to you guys next time.